Thanks, Oliver. Good morning for those here and those online. My phone here is, I'm not on social media, these are my notes. So I've been at JMFin now for about 11 years, and it's a happy home for many reasons, but there are two differences about JMFin. The first is that there is no one between you, our clients, and us, your investment managers. And so that enables us to build long-lasting and multi-generational relationships. And we all know that trust is built over time. The second is that I and my fellow investment managers have the freedom within compliance parameters, I must say that, to create portfolios for our clients. We're all fed the same investment banking research. We all have access to our in-house excellent research team, and we all enjoy the thoughts and outputs of our monthly asset allocation and stock selection committees. But we're then free to make our own decisions. And these two qualities are quite rare in today's investment firms. As well as being an investment director at JMFin, I've been an investor myself since 1985, when I inherited a few shares from my late grandfather. They were in companies such as Rancovis McDougall, which is now Reckitt Benckiser, Imperial Chemical Industries, now part of AstraZeneca, Unilever, Shell, to name a few. And I was thrilled to receive dividend checks now and again as the companies distributed their profits to their shareholders. And I understood quite quickly that I owned a tiny piece of each of these companies. And I could see that my investments would gradually grow over time. So I learned early on that I wanted companies that I invested in to be profitable and to generate cash so that ultimately and selfishly I would benefit. And my love for the stock market began. Now, from this chart, which luckily starts in 1985, you will see that the index is very reactive to events. So these may be political, economic, war, and more recently, the pandemic. And these events I can't control. They're out with our knowledge or our control and can be quite shocking. And one wonders when relations first soured with our continental Europeans. Perhaps it was when sterling exited from the exchange rate mechanism in 1992, and perhaps that was the start of what we now term Brexit. However, I can control which companies I buy, those that should stand the test of time. If you invest with a long-term perspective, you can see that these bumps on the chart really don't matter. It's true, there are times when it's deeply uncomfortable, but with a fair wind, I might see another 36 years of being an investor. And if I do, then I'm going to see a fair few bumps along the way. There's always a catalyst, an event, a piece of news that captures my eye. And then I joyfully run down rabbit holes to see how far I can get. And quite often I reach a dead end, but sometimes it becomes interesting. So I'm going to take you down a recent rabbit hole, and there's a story. I love cars. More precisely, I love the speed of cars. As a child, I wanted to be a racing driver. And in fact, my late father organised an extra driving lesson for me from the police, in the knowledge that he knew, quite rightly, that I would want to drive fast, but he wanted, as my father, to do so defensively and safely. And indeed, on my drive to the office in Yorkshire, I have a favourite go-to fuel station. It just happens to be next door to the McLaren garage. So my view while filling up my car is really rather nice. Now, this is a very fast car. It was my younger daughter's 21st birthday last year, and rather than having a party at home, thankfully, she wanted to go to Silverstone, the home of the Grand Prix's first race in 1950. This was thrilling. The noise, the fumes, the post-pandemic crowds, 140,000 people, was a little bit scary, given that we'd all been locked up for many months, just the four of us. Kitty's allegiance was firmly for Verstappen of Red Bull to win, but he was quickly trounced off the track by Hamilton on the first lap, and so she quickly turned her support to Lando Norris of McLaren. Meanwhile, I had rooted for Lewis Hamilton, who won for an historic 8th time, and Leclerc of Ferrari came second. And after a 60-year absence, it was fabulous to see the return of Aston Martin in its Bayberry green racing colours, and its driver Lance Stroll came 8th. Ground is now broken at Aston Martin's manufacturing site, just over the road from Silverstone, and there is no doubt about the vision and ambition of its chairman and majority shareholder, Lawrence Stroll. Ferrari has won a staggering 238 Grand Prix, way ahead of its nearest rival, McLaren, at 183. Of Schumacher's 91 Grand Prix wins, 72 were with Ferrari. To me, Schumacher's career seems more glorious than Hamilton's, though the raw data doesn't support that. Hamilton has won 103 Grand Prix thus far. His 103rd on Sunday in Jeddah was filled with drama as he battled it out with Verstappen and denied Max his first world title. And we look to the final race of the season in Abu Dhabi. Formula One teams earn revenue from sponsorship, from investment, from driver income, as well as from Formula One management. And taking Formula One management, there are a number of streams paid to all the classified teams, but there is one unique payment. That is the long-standing team payment, also known as the Ferrari Payment. In 2019, this was $68 million for the season, and that was more than the $61 million that Mercedes received in prize money that year. So one would assume that Formula One teams make loads of money, make huge profits, but they don't. Most break even, and 2 are loss-making, and the phrase pay to play comes to mind. So what's the point? The point is that F1 teams are simply marketing platforms to show that their road cars are the best. Now, in asking this question, I hope for a better response than the Prime Minister received when talking about his visit to Peppa Pig World last month. And I'm certainly not going to imitate his guttural car noises. So who has seen the film? I would imagine most of you. Oh, we have 1, 2. Well, we've got a few. We've got a few. But I'm the 6-year-old on Christmas Eve when a new Bond film is released. And my expectations have always been met with one exception: Quantum of Solace, which I really didn't enjoy. And No Time to Die was the very, very best of Bond. And I'm not going to give you any spoilers. Those of you who have seen the film will recognise the 1960 Aston Martin DB5. The film has a very, very scary opening, in my view. But then there is the wonderful scene as Bond drives the DB5 along the coastline of southern Italy. I had to look where it is. It's in Matera. His 1987 Vantage V8 also makes an appearance. And driven by new agent Nomi, the DBS Superleggera, 700 brake horsepower V12. Will Nomi be the new 007? Who knows? So there are 4 simple investment rules in my world. I want businesses that have clear barriers to entry. This means I want them to have unique qualities. I want them to have powerful brands, and this makes them future-proof. I want to see revenue growth. This simply means I want to see sales growing. and I want to see high returns on capital. So this tells me how profitable a business really is. There is a sum to do which I won't explain, but ROCE, R-O-C-E, is a ratio which shows how efficiently a company uses its capital, so that's its shares and its liabilities, no matter what that company does, and then I can compare apples and pears. And finally, I want businesses that are cash generative. These are businesses that don't need to make lots of capital investment just to stand still, which Tesco did spectacularly well a few years ago. And so if companies are cash generative, it means that they can invest in their future and progress, and perhaps also distribute more to its shareholders. Oh, I forgot to tick those, that's fine. Right, well, this is a fantastic brand. I don't think anyone could argue with that. Aston Martin was founded in 1913 by Lionel Martin and Robert Bamford. Its car was named after Lionel raced and won at Aston Clinton Hill Climb. Its black, green and white logo symbolised the only colours of elegance and refinement. The wings symbolise freedom, speed, dreams and exploration. Let's look at the numbers. Revenue. Well, this isn't showing steady growth, and with a dramatic fall of 38% in revenue in 2020. But given the pandemic, I'm not put off just yet. This might be an aberration, and certainly revenues are expected to recover. Free cash flow. The last time Aston Martin was cash flow positive was in 2018, and there's been a steep decline since then. And as a result, its return on capital is and continues to be in negative territory. The names Dino, California and GTO are evocative, as well as the numbers such as 250, 308, and now Daytona SP3. This is the newest of Ferrari's Icona series, with only 599 cars being made, each with a price tag of no less than £1.7 million, and all are spoken for. It's a 6.5 litre V12 829 brake horsepower with a top speed of 211 miles an hour. I think you're probably guessing I still love cars. The Daytona name is perhaps a nod to the 1967 24-hour race. Morale had been low at Maranello, Ferrari's headquarters, as Ford had given Ferrari a beating in 1966, and Enzo Ferrari was pushing his designers and engineers for a lighter and faster car. The result was that the Ferrari P4s took the checkered flag in unison, 1, 2, 3. Scuderia Ferrari. I've been practicing my Italian. The prancing horse in its stable. The logo is iconic. It adorned the fuselage of Italy's World War I hero, fighter pilot Francesco Baracca, on the side of his plane. And his parents suggested to Enzo Ferrari that he put it on his cars to keep him safe, and he took their advice. Two bits of news have caught my eye about Ferrari recently. The first, that in 2025 it's going to be launching its first electric vehicle. But it's going to be designed by no less than Sir Johnny Ive, who was the chief designer for Apple until 2 years ago. And I'm sure there are many among you here who prefer the Android operating system for your phones. Yes. But few, I'm sure, could argue that Apple's designs are far more beautiful than any other. And Ive is now to apply that design flair to a car. He's also a Ferrari owner, and he's also an Aston Martin owner. The second piece of news is that Ferrari has appointed a new chief executive, Benedetto Vina. Now, he's come from ST Microelectronics, and he was president of its largest division, focusing on micro electromechanical systems and sensors, and this probably tells you the direction that Ferrari is going. So let's look at the numbers. Revenue. Steady growth here. A small dip in 2020, pandemic induced no doubt, and just down 8%. And we expect continuing growth in revenue over the coming years. There you go. A healthy return on capital employed. A very healthy chart there. And it's a business underpinned by positive free cash flows. So at the moment, this business is ticking all the boxes. You might think that luxury would be sensitive to economic conditions, and I agree with that. If you look at Bentley and Lamborghini, both part of VW, they didn't surpass their 2007 volume peaks for 6 or 7 years later. And in contrast to the 20 to 50% declines at competitors, demand for Ferrari was much more stable, with a small dip of 4% during the great financial crisis. And this, to me, underlines its superior brand. Annual growth for the luxury sector is expected to be 10% per annum as the global rich increase. So for me, this is a place to be. So what is luxury? Well, I think both Aston Martin and Ferrari fit in this space. They have the brands, and some luxury brands are better than others. Does Porsche fit in this space? It manufactures around 280,000 cars per annum, and this compares to fewer than 10,000 for each of Ferrari and Aston Martin. I like Porsche, but the brand doesn't quite fit in the luxury space in my mind. Ferrari has the fastest earnings growth in the luxury sector, and above all else in terms of brand proposition. Only one other company compares, and that is Hermes, which enjoys similarly high margins of around 30%. Hermes has remained discreet rather than ostentatious, and it's timeless rather than cutting edge. Its Birkin and Kelly handbags sell for $10,000 and are refreshed versions of what it has sold for decades. And while I'm assured that a Dior dress will last just a season, an Hermes product is for life. We know that both Ferrari and Aston Martin have fantastic brands and customer loyalty. Aston Martin are now back in F1, which may give it that marketing platform to showcase its cars. But I'm not certain that its expansion into the SUV market with its DBX fits with that my luxury view. So, would I buy a Ferrari? No. Beautiful and head-turning though they are, it isn't my style. When all is said and done, my heart desires an Aston Martin. Precisely a DB11 V12, 0 to 62 in 3.7 seconds. Perhaps it's the association of James Bond and a distant memory of a gift one Christmas of a dinky DB5. I really want Aston Martin to succeed, and with the F1 platform, perhaps it will. But when making investment decisions, one has to separate emotion and sentiment from the facts. Thank you.
Lucy, say that. Lucy, say that. Thank you very much, Lucy. We might just see if we've got a couple of minutes for any questions in the room, and I'll just see if there are any online at the moment. If anybody would like to ask a question online, please do so via the Q&A function. Does anyone have any questions for Lucy? I mean, Lucy, I always had you as a Ferrari lady, not an Aston Martin, so thank you for opening up your inner secrets there.
Yes.
I'm very grateful. It must be really hard to divorce that sort of sentiment from practicality when you're picking stocks?
It really is, because, as I've said, I wouldn't actually buy a Ferrari, and I'm sorry if there are Ferrari owners here. I suppose it's the Aston Martin. It's the fact that it's returned to the F1. It's the fact that it's in that lovely racing green. You know, you look at the logo, the wings. When I was reading about its logo and the history of it, that just made my heart sing. And it's really hard, because I really want Aston Martin to work, but the numbers just don't stack up at all.
Brilliant. There is one question over there. There's a microphone just to your right, sir, if you wouldn't mind.
Thank you very much. Very interesting, and I understand completely that you were using the cars as illustrative of investment decisions. But isn't it all a bit academic? Because aren't we just going to be dialing up an Uber, a driverless Uber, in a few years' time, and these car firms will actually just disappear?
I don't think so. I think if you have a love of cars, I mean, Ferrari, for example, they're not really driven. They're in the sense that we don't use them to commute. I use the Royal We here. They're not built for that. They're just built for that sheer enjoyment, and I think that will prevail. So I hope that answers the question. I think there's always going to be the history of these companies as well.
Lucy, thank you very much indeed.
Thank you.